All right, today we're diving into a company that's making an absolutely huge bet on itself. We're talking about Treasure Global. They had this massive vision for explosive growth, but, and this is a big but, their stock chart is telling a completely different story, one of major uncertainty. So let's break down both sides of this high-stakes game.
So, what's all the fuss about? Well, the entire story for Treasure Global right now really boils down to one single, kind of crazy number. This number is everything. It's driving their entire strategy, and you better believe investors are watching their every move.
Yep, 100x. The company is gunning for over $100 million in revenue in the first year of their new product launch. I mean, come on, that's not just an ambitious goal. That's a moonshot. It's a massive bet on pure exponential growth.
And who's leading this charge? That would be their CEO, Carlson Thao. You can just feel the confidence in his words here. He's not just saying, hey, we launched a new product. He's framing the early launch of their new OCI wallet as a major leap forward for the whole company. It's all about building that forward momentum.
Okay, a 100x goal sounds fantastic, right? But how in the world are they actually planning to pull that off? Well, the whole game plan hinges on this new product, the Oxy wallet. So let's pull back the curtain and see how this thing is supposed to be the engine for all that growth.
So the Oxy wallet is really the centerpiece of their strategy. They've built it to be super flexible. It plays nice with all the big blockchains like Ethereum and Solana. That's smart, makes it way easier for people to jump on board. They're also really pushing the trust angle with top-notch security standards to make users feel comfortable. Plus, there's a pretty cool AI assistant to give you personalized tips. But here's the kicker, and this is so important in this space. You keep full control of your own assets. For a lot of people, that's an absolute deal breaker if it's not there.
Their playbook is actually pretty straightforward. It's a simple three-step plan. Step 1, they hit the ground running by launching the wallet ahead of schedule, trying to get some buzz going. Step 2, they've already landed their first corporate client, which is a great proof of concept. And then there's Step 3, and this one is the real game changer. They're looking to buy a majority stake in a financial advisory firm. Why? Because that one move could instantly give them access to a huge network of consultants and thousands of potential customers. That's their shortcut to hitting that 100,000 user target by the end of the year.
Now you know as well as I do, big plans like this need big money. You can't just wish an expansion into existence, right? So they had to go out and get the capital to fuel this fire. And, well, they just did.
And there it is, $2.5 million. They got this cash through what's called a registered direct offering, which is basically just a fast way for a company to raise money from a small group of investors. This isn't just pocket change. This is the jet fuel for the Oxy wallet's rollout and for sealing the deal on that big acquisition we were just talking about.
Okay, so that's the company's story, right? Ambitious goal, clear plan, and now they've got the cash. Sounds pretty good. But the stock market often tells a very, very different story. So now let's switch gears and look at the charts. Let's see what the traders are thinking, because right now this stock is at a major fork in the road.
When you look at the technical analysis, it really just boils down to two totally opposite outcomes. You've got the bullish path, a big breakout to the upside if it gets some real momentum, and you've got the bearish path, a nasty breakdown if it falls through those key support levels. It's a classic standoff. The bulls and the bears are just staring each other down, waiting for someone to make the first move.
And this isn't just guesswork. Traders have drawn some very clear lines in the sand. For the bulls, the magic number is $11. A solid daily close above that, and they're looking at targets of 20, maybe even 30 bucks. But for the bears, if this thing closes below $6, watch out. They see it sliding down to $3 or possibly even $1.50. These are the price levels where the real battle is going down.
So the big question is, which way is it going to go? Well, to get a clue, the pros aren't just staring at the price. They're watching a handful of other critical signals, little clues that could tell us which side is about to win this fight.
So here's what's on the watch list. Number 1, and this is absolutely crucial, is volume. Any big price move, up or down, has to be backed by a big spike in trading volume to be seen as legit. Without it, it's just noise. Next up, moving averages. Right now, they're acting like a ceiling that the stock just can't seem to break through. Then, of course, you've got news. A surprise SEC filing, a new partnership announcement, anything like that could flip this chart on its head in a second. And finally, a word of caution, liquidity. This is a thinly traded stock, which means it can be super volatile. You've got to be really careful with your orders because prices can swing like crazy.
And that leaves us right here. It's this incredible contrast, isn't it? On one hand, you have the company with this unbelievably bold 100x growth strategy,
And on the other hand, you have a stock chart that's coiled up tight like a spring, just waiting to pop. So the ultimate question is, what gives first? Will the company's exciting story be enough to fuel a massive breakout, or will the cold hard technicals win out and lead to a breakdown? That is the million-dollar question.